What do you see as the top one or two most important functions and capabilities that private lending bring?
If we can help the borrowers who would otherwise be stranded or left behind, and we can give the investors satisfaction in the rate that we're giving them. And here at All Western, because of you, we're able to offer full rate on every deal. The last box is satisfying our colleagues and our team. Everyone walks away happy and they will return to do it again.
In today's episode, we're going to focus on AWM's private capital and lending division. We'll be joined by Richard Whelan and Chris Bennett, two team leaders who are the experts in this area of lending. I hope you enjoyed this video. Please hit the subscribe button, like the video, and leave me any comments that you have. All right, well, thank you for joining us today. In our episode, we're going to be talking about our private capital and lending team here at AWM. Now, this is a very unique product to the industry. I think really allows us to bring a very kind of unique and distinct product to the marketplace, and gives us a lot of opportunities that may not be available to most other mortgage companies. And today we have with us Richard Whelan and Chris Bennett.
Good morning.
How are you guys doing?
Fantastic.
Good. Appreciate you joining us. So again, private capital and lending, unique product to the industry. Not many mortgage companies have a team of experts like we do here at AWM. The importance of private capital today, in my opinion, as the CEO of the company, is it allows us to bring a very unique product to the marketplace. It allows us to give our loan officers something different, especially in a more challenging market. So maybe we can start, though, by talking a little bit about your background. Richard, let's start with you.
Okay, let's see. I've worked at All Western Mortgage. I started here in October of 1989.
Wow.
Been a long time. We've been together a long time, mostly doing regular loans. And then as things changed and evolved, I started working more and more with the private investors. And then Chris and I determined that I would just be that go-to person with the group of people that we had created to simplify the process of running loans and getting loans to them to review and approve.
Yeah, so
essentially, it's been a lot of fun, actually.
So you've been that front person coordinating with the sales team,
yes,
and obviously interacting with the investors as well.
Yes, for a long time.
Yeah. Chris, tell us a little bit about you.
Sure. My pedigree is in high-level finance. I've done it for better than 2 decades. Started off the private banks at Morgan Stanley, moved on to a hedge fund, and then all that culminated in me leaving California, as so many do, moving to the desert and getting into hard money lending. It is the culmination of a lot of hard work, but at the same time, I've never enjoyed anything close to this much. And to come aboard a team like this it's a dream come true. The handcuffs are off. We can go into so many different markets that I've wanted to go into, and working alongside Richard is fantastic.
So I spoke a little bit about the vision, or I guess really the important factors that private lending. What does it mean to you?
What it means to me is I get to go to sleep every night knowing that if we check the 3 boxes, then it's very generic to say, but it's true. If we can help the borrowers who would otherwise be stranded or left behind by traditional Fannie Freddie lending, and we can give the investors satisfaction in the rate that we're giving them. And here at All Western, because of you, we're able to offer full rate on every deal. If we can check that box, then the last box is satisfying our colleagues and our team. And if we can check those 3 boxes, everyone walks away happy and they will return to do it again. So that's my overall goal.
Absolutely. And Richard, for you, what do you see as maybe the top one or two most important functions and capabilities that private lending bring?
I think the word I would use is opportunity. Okay, it gives our loan officers an opportunity to get their client the loan that they need to fulfill their goal. It gives our clients an opportunity to get what they were after, their goal, and it gives the opportunity for us to maintain a long-standing relationship with that client, that our loan officers and our team can keep those people on board. Is AWM for life is kind of the plan, and I think that it's something that we bring to the table that other mortgage companies just don't have.
Absolutely. So let's maybe kind of, I think, take a step back and look at exactly what private lending is. So we in terms of the product itself, let's start, because it is different. You have your traditional, for those of you who don't know, you've got your traditional lending, your agency, Freddie Mac, Fannie Mae, FHA, VA, jumbo, now even non-QM. So the way I would look at that as it cascades down is, non-QM, and then finally private lending. So behind that, and we all know, and we can discuss that in a little more detail, but private lending has uses even in some of those better customer categories.
Yeah.
But let's start a little bit with kind of the product itself. What are we typically talking about? And Chris, I'll turn to you for this. What are we typically talking about in terms of the product? Let's look not so much on client, but interest rate, term, and really kind of maybe your top one or two use cases for the product.
Absolutely. Fantastic question. We can do anything from residential to multifamily, commercial, raw land, manufactured housing, so long as it's attached to real property. And the beauty of our product, and I think I speak for Richard on this, is we can move fast. We don't have the holdups or the red tape, less HOA. We move as quickly as our team can move. So if we got a call that said, hey, we have a client who could possibly lose their earnest money on an owner occupied if they don't close by Friday, and it's Monday, we're going to make it happen if we can.
And I think that's where as I referenced some of the higher end customers that might utilize private lending, it's not necessarily because they have credit issues or maybe they can't prove their income. There just may be a special need, and speed being one of those most important. Richard, in terms of interest rates, points, obviously we know there is a price to pay for some of that flexibility and speed. Give me an idea of general terms of the loans that we're putting together.
Most of our loans range anywhere from 12 months to a little over 60 months, depending on if it's a non-owner occupied or an occupied purchase. And being able to do things quick, get a quick answer, get a quick turnaround, also to try to keep the parties involved, understanding that there's a legitimate deal now that can be done and closed quickly to keep everybody on board, especially nowadays with the builders wanting to hold earnest money deposits if they have backup offers. It's important that we don't want anybody to lose any money, and we want to show the credibility and the experience that we have to get these deals done as quick as possible.
I think you mentioned builders and I want to touch on that for a moment. And I see that interest from builders sort of ebbs and flows with the market.
Yes.
The hotter the housing market is, the more buyers they have, they tend to not be as concerned about an individual customer. We've got 10 people waiting on that home. Doesn't matter. We don't
Fully factor.
Yeah. So, but now that's changed. In today's market, that is different. We've got a little bit of an elevated interest rate. The consumer is not as excited about purchasing a home as maybe they were 6 to 12 months ago. So now to that home builder, every customer is critical. So Chris, for you, what are you seeing in general in terms of that interest?
It's sustained. While the market may have fallen off a little bit, speaking specifically about Southern Nevada, according to the Global Economic Alliance, we're still catching 13.6 new residents per hour. And there's a demand for housing, and there's ebbs and flows, as we all know, but the need for lending will always be there. Whether rates are high or rates are low, people still want to buy.
Yeah. Is there a target market for either of you? And I'll just throw this to both of you in terms of your investors. And obviously we've expanded the program, which is one of the reasons why we're here today. We were, I think, more or less focused on Southern Nevada. As Chris and his team have joined us, we've now been able to expand that. But is there a target market that you would say is hotter right now than any others, or is there an area of the country that you feel is more in need of this, or is it just general?
I think it's all over. I really do. I think the borrower that needs us, it used to be stereotyped as a credit issue situation, and nowadays with different forms of self-employment and some guidelines being stricter on folks, opens up an area that, people are acceptable of the rates and a little higher fee as long as they get what they want. And they understand in most cases it's fairly short term. They're gonna get the solution that they need to move from our product to the next level, and they're okay with that. They understand that that's the way that it could work.
I completely subscribe to everything Richard just said. Just to make it a little more specific, I think the majority of our investors feel most comfortable in the Southwest, but they're certainly receptive to other states. If the value's there, and you have over 300 LOs here, they're constantly bringing value.
Yes.
For situations that they can't quite make work. And honestly, in my years doing this, I would say Florida is the third most popular state from where I come from. So I don't think there's a particular market. If there's value and the investors all understand this is a bridge loan, whether it's 6 months or 61 months. And so if we can bring value to those investors and assist the borrowers, just tailing off what you said, ever since COVID, the majority of the workforce is either partially remote or they have changed careers into a 1099 situation. So, that doesn't always satisfy Fannie Freddie or even an FHA. So that's where we're here to complement those existing LOs and work closely with all of them.
So you talk about short term. So in my mind, I'm thinking as a loan officer, this is one transaction, and I should be positioning the customer for that second transaction, which would be a refinance into a better interest rate product. Am I right about that?
100%.
Okay.
I mean, ultimately, that's the goal, because the loan officer maintains that relationship and shows the client, that they're with them all the way. It's good for our investors because it turns the money, okay, and it reinvigorates the capital back into their pockets from refinances, and it just, that's the way it should work. Everybody should have that goal in mind of that's an exit strategy that they need to stay on top of. That's the plan.
So let's touch on that point. You mentioned the investor. So for those who don't know and understand exactly how this all works, this is a great opportunity for us to kind of get into that part of it. So who is the actual lender on a private loan?
I'll take this one.
Go ahead.
So the private lender or lendors are qualified investors, meaning that they have a net worth of $250,000 or greater, excluding their primary residence. So that opens up the investor pool to a great number of people. And so once they're introduced to this product, in my experience, they either shorten their duration of fixed instruments or equities and get very, very involved with trust deeds, because not only is the rate constant, but we make sure on our side that the borrowers have enough skin in the game, if you will, or equity in the properties, that if life happens, if we do have to foreclose or did have to foreclose, the investors come out even better than expected.
Okay, so we've got just to kind of put some structure to this, we have a first deed of trust, right? So this loan is in first position.
Yes.
Interest rate of typically 11 to
14, maybe
11 to 14%. So there's where the investment vehicle comes in for the investor. If I'm going to earn, right, what am I earning consistently 11% on these days? Or what other investment am I, right? Obviously my money market isn't getting that.
No.
My stocks, maybe some days, some not, right? But you have a very consistent offering to your investor, who is essentially a client of yours, and then backed by real estate, which I think historically has been one of the best.
That's the biggie.
There it is, right there. Yeah, and so let's talk about loan to value. So you said skin in the game. What type of skin are we typically talking about?
Okay, so let me address this, because we have so many loans coming in right now that we are choosing the ones which have the most equity in play. So if you're a loan officer in Enid, Oklahoma, and you send us a single family residence that's a 50% loan to value deal, chances are, if the credit is above 600, that's a loan we're going to be very interested in, because it's going to provide so much security in that property that that will turn the investor on. And once we do that once or twice, they'll keep returning to us, knowing that we're providing value.
Got it. So let me talk about hear from you actually success stories. So I want to hear, maybe you can give me, Richard, a real live example of a loan that you recently closed.
We're closing a loan actually right now, and we've done several of these where we get folks that had a change in career, or with COVID or something, they had some issues, and they had maybe a dip in income, and they were living on credit cards, running up debt. And now they're trying to refinance, but because of credit scores being low, maybe the property needs a little bit of work. We're able to go in with a private loan, and pay everything off, clean everything up. We want to benefit to borrower and give them a 6-month to a 12-month window, get those credit scores up. And now the loan officer can go back with all of the other programs All Western has available. Once they fit in that box, it truly helps them. Without the private loan, they may have not been able to get to that point at any time in the near future.
So what you're describing is a cash out debt consolidation.
Absolutely.
Okay. So they own the property. They have a significant amount of equity.
Yep.
They have a bunch of, let's call it, unwanted debt.
There you go.
That they would like to
Accumulate
consolidate.
it. Yes.
And so now you've been able to put all that into a single loan.
Yes.
How much money are we saving them? Do you have any idea?
In most cases, in this one I'm working on now, we're actually going to be lowering their overall monthly obligation by a little over $300.
Okay, $300 a month.
And then when you first look at it and you say, okay, it's 11%, say, is the interest rate, it sounds so terrible. But when you start taking credit card payments and credit cards that are in the 20%, 25%,
absolutely.
Okay, and you start consolidating all of this down to one payment. Now it gives the borrower an opportunity to actually save some monthly money. By paying off the credit cards, we don't require them to close it, so they can use them sparingly with some good counseling, either through AWM credit help and the loan officer. They can really, truly now have an opportunity to improve their situation. The most important thing on that is, and we do get requests for it, but it's extremely hard to do, is a lot of the lenders do not like second mortgages. So in some cases, at first it looks like it makes more sense to do it as a second, but after reviewing it and going back and actually looking at the math, it doesn't. We can sometimes do it in a first mortgage position and it still works just fine.
Well, there are limitations to the program. I mean, that's
100%.
That's the same way with any product that you have. There's guidelines, there's rules, and you have to adhere to them. Chris, let me ask you, common misconceptions of private lending. Can you give me a couple that come to mind?
I love talking about private capital, so I can absolutely I can provide you with a couple. The most offensive, I would say, is when I walk into a room and I describe what it is that my primary vocation is. People think that we're charging 18, 20, 22%, much like credit cards. That's very much not the case. As I spoke about previously, our 1/3 of our goal is to not only provide the borrower with needed capital, but it's to do it at a competitive rate. So again, I'm going to go back and I'm going to mention this again. This is probably the only shop in town that consistently gives full rate to the investor, allowing us to lower it.
Mm-hmm.
So, when you're talking to a borrower or an investor, if they understand that, we're going to be the one-stop shop.
Yeah, that's the win-win that we're all looking for, right? The customer gets a better opportunity, investor gets a better opportunity. So for you, that misconception really is really about the interest rate and the type of lending that we're doing. So let's switch gears a little bit. How does a loan officer identify a private lending opportunity? Richard, I'll start with you.
I think in most cases, if they have the knowledge of what programs are available, that for sure helps. Actually, the way I see most of the private deals come in are after they've tried to go through the myriad of programs that we have, and it just doesn't fit for whatever little reason, and then they'll end up sending it to us to review it. I do get calls occasionally from a loan officer saying, "Hey, I have a deal. It may end up going private. We are going to try some of the other stuff first, but I just want to give you a heads up." So that's kind of how we end up seeing it. We either see it as kind of a possibility coming down the road if it can't get through the system, if they're going to try it, or we end up with it with a, please get this done. We tried everything and we can't. most of our loan officers have the knowledge that that we exist and that we are here to help. And so they kind of have in the back of their mind that if they have to, we're there if they need us to try to step up and get it done.
And tailing off what you just said, you're right. Most of the LOs, the conventional LOs, do understand what we do, sort of. But when I sit down with the different teams, whether it's in Arizona or Oregon or Texas, and I engage with them and I play Q&A for a little while, it's massively effective because then we can open their eyes to everything that we can do.
Right. I think that one of the misconceptions that the loan officers need to understand is that we are not there to replace a rate and term that they were attempting to get with a program that wouldn't work. So, if they were trying to get a 90% loan at say 7%,
Right.
they can't expect to come back to the private lending division and go, well, they were going to get 90% and 7%. Well, they got turned down.
So realistic expectations.
That's a very good way to put it. Realistic, and that helps when you're working with your customer. Let them know, hey, we can get this done, but there's the difference. But yes, we can make it work. But they've got to explain that, that's very important.
So really, what we're looking at here is an alternative product that has the ability to sort of catch and be a safety net for loans that aren't fitting in the traditional sense, right? So really becoming, I guess, just another opportunity to close a loan that did not exist previously. How can our loan officers engage best with you? What would you recommend? If I was new to AWM or as a loan officer, what would you recommend that I do in terms of, should I set up a call with you? Is there information that you can provide me that will educate me to the product? How would I best get sort of up to speed on the product?
My favorite thing to do is talk about these products.
I agree. A phone call, because that helps us ask questions that, I'm sure you've gotten them too, Chris. I've gotten emails where it's like, I have a possible private deal. This is their score. They have 20% down. What can we do? So, we've had calls with folks, especially on non-owners, where after talking with them, the loan officer, we realize they have another property that's maybe free and clear. Now we have an opportunity to put a deal together by actually getting information from them versus just a text or an email, which is limited of what's available for us to use to try to get the deal done. So talking is very important, in my opinion.
Obviously, face-to-face is optimal, but again, this is my 4th week at AWM, and I haven't been to all the branches yet. But I will say that those branch managers who I've spoken with and who we've met already, those are the best referral sources because they really understand what a compliment we are to their business.
And we know what questions to ask.
Yeah. Well, I think that's the beauty of what we're talking about here. It's that ability to be creative, to bring unique solutions to the table. And you're absolutely right. Those conversations sort of, unearth.
That's a great way.
Right? They unearth other potential ways that this could be structured, whether it's bringing in another property, whether it's bringing on a co-bar or whatever the case may be. You've got that sort of depth of knowledge and product to be able to support them in that way. So really, guys, we're going to have to wrap this up here, but this has been a pleasure. Yeah, no, thank you. And I think really, we should also be talking a lot about, in my mind, how to go out and actually kind of market for this product, right? So people should be using this on their social media. They should be using this as marketing pieces out to their referral partners. Right now, a lot of what we do is sort of catching the fallout. Loans that don't go non-QM or for whatever reason aren't making it in the traditional fashion. So here at AWM and wherever you are, I think it's important to really understand the power of this loan program and be able to market it out to the outside world so you can start to attract that business in rather than it just being kind of a last resort Hail Mary that we're doing at this point.
And word of mouth, it spreads.
It does. And I know we're wrapping up, but the best advertising is walking into any conventional lender, any one of them, introducing yourself, leaving them a card and say, I do private capital. You'll get a call.
Yeah.
Period.
And think outside the box. There's a lot of sources between CPAs, between estate planners. There's, realtors, obviously. There are a lot of sources to try to pick their, to leave your information that we have to
Right.
say.
That's great. Well, if I was going to try to expand my business, I would definitely add this to my toolbox.
100%.
So guys, thanks for joining me today. It was a pleasure speaking with both of you. All right, guys. Thank you.
Thanks.